Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Thursday the 31st of August 2017. Another month down more or less. Goodness, where does the time go? I want to talk to you today about an unusual type of trap, a trap that I don't necessarily speak about that much. I certainly haven't on the daily videos, so hope you enjoy it. And it's a more of a dynamic trap, not necessarily a structure-based trap like a lot of the stuff that I talk about. I say dynamic because it's actually using moving averages. So this is a 100 period SMA, Bobby basic stuff, nothing special, no need for an exponential, just a standard simple moving average. And this is the 100, and I'll just extrapolate the line out a bit so you can see what I mean. And it's about watching how price reacts at these moving averages. So in your standard stuff, your 200, your 100, your 50, your 20, even your 10 sometimes. But the preferably they want to be the 50, the 100, the 200 in all fairness, because they're just a little bit more legitimate moving averages that traders are trading. And as you can see, price comes into a falling 100 period SMA, and lo and behold, it reacts off the moving average, and it's followed up by a pretty negative candle. Now that would have tempted in many traders believing that a day trading moving averages, again this is a 15-minute chart, believing that would follow through. But what's happened is, rather than it follow through, it's now turning up against those traders and trapping them essentially off that dynamic moving average. Now it hasn't turned into anything yet, but if it got above there and you got a little pullback, that wouldn't be a terrible little intraday trade. You've got traders down here as well who are trapped at those lows, again believing that this trend was going to follow through. The problem is they're trading against the trend in the opposite direction of the higher time frames. The euro dollar's in a big uptrend currently. The euro across the board is, to be fair, so anybody going short this stuff is rather brave, and especially doing it off the lower time frames. So you just want to look for those traps off those lower time frames if you understand the longer term trend, and then you can look to jump on board and ride those higher time frame trends. So it's just an interesting example of how you can use traps, not just a level of support or resistance that's a static target, this one being more dynamic because it's a moving average. So I hope that helps. If you'd like to come and join me in my brand new inner circle, click on the link below. Take care.